Okay. All right. So tonight's session is going to be a combined session, right? Combined in terms of two asset class. The main topic still remains the same, right? The main topic is still about interest rate, how it affects the market. But I'm not just going to talk about the stock market, but I also want to bring in our resident mortgage expert, interest rate expert, Ethan, to talk about the mortgage rates going forward. Because in the Invest with Pete, we don't just talk about the stock market. Another big asset class is actually housing. Okay. And I realized that after I talked to a lot of my clients who are either my investors who invest in my fund or I coach them one-on-one, right? I realized after I settled their stock market portfolio, okay, the funny thing is this, actually, the stock market is not the largest portfolio. It's not their largest investment. The largest investment for most people, right, is their property as well. Okay, so I want to make sure that I cover that, right? Hey guys, maybe you all type in the chat, do you agree that, or is it similar to you, right? What is your largest investment in your portfolio? Right? Can you type in the chat? Is it the stock market? Is it property? Or for some of you, maybe crypto? I don't know, right? Or what other asset class do you invest in? Okay, can you type in the chat? All right, let me pin Ethan over here so that Ethan can join us as well. Okay. Hi, Ethan. Can you hear us? Hey, wait, let me unmute him again. Try again.
Hello, everybody. How you guys doing? Good to be back.
Okay, good to be back. Okay, hey, Ethan, so how about you? What is your largest investment in your portfolio?
My company.
Oh, your company, yes. Okay. So for those of you who are running business, that's definitely true. Okay,
Uh,
so
but
no, go ahead, go ahead.
Really getting my one owner, one essential occupier HDB, 5 room,
Oh,
on the way of doing that. So it's a bit of strategy and sequencing lah. Then
yeah, yeah.
eventually, wife
Yeah,
will
we
be.
can talk more about that during the Q&A if you all have questions about how
Let's do that.
to strategize for your housing in Singapore. Okay,
All
so
right.
let's get started. The FOMC just ended last week. Okay, and as expected, we saw that the Federal Reserve didn't increase the interest rate, but surprisingly, they promised that not promised he forecasted. I don't say he promised, but he forecasted that there will be one rate cut. Okay, there will be one rate cut for the rest of the year. Okay, so this is where I want to bring Ethan on as the expert to share a bit more about the take on the interest rate, right? So Ethan, when you look at the last week's interest rate, let's start on the property side first. Okay, how do
Ah,
you see this affecting the mortgage rates in the property segment?
okay. Luckily, I don't work for the bank. Otherwise, I'll advise the banks to increase rates.
Huh?
The
Why?
reason, the reason why, right? Yes, interest rates are declining, but they are declining at a much slower pace.
Lower base, yes.
As we jump into the data, we will go into the weeds. We will go into understanding why it is like this, how prevalent inflation is, and as well as other factors that we can have fun talking about later.
Yeah, okay. So guys, along the way, if you have any questions as well, do type in the chat, right? Regarding
Mm.
interest rate or without your property or your mortgage, especially those of you with loan, if you have questions about that, do ask Ethan while he's here, okay? And later on, we're also going to talk about stock market. That will be my segment. And finally, we go into the Q&A as well, okay? So Ethan, maybe you go first, talk about your findings for this round of the FOMC. What do you see happening?
Excellent. Okay, I'm going to share my screen. Are you able to see that?
Yep.
Okay, first things first, I'm say hi first. I'm representing Unbeatable Mortgage. Today we are specializing in bank mortgages in Singapore. We are certified by SAMP, and we are here to help you save money. Okay, so we work with 10 banks to be able to get you the best rates. And today we are just going to talk a bit more towards where the rates are going, and where everything is probably headed to, how to help you save money. But we are talking about rates specifically. There is also strategy and structure where this is a bit more tailored, a little bit more personalized. Later towards the end, you'll be able to see how we actually help our clients think. So this disclaimer tells you that we are not fortune tellers. We are data analysts. All right. So that said, right, guys, on the ground, I want to give you guys a bit of an update. The floating rates not much change because they float with the times lah. But the fixed rates, right, they may begin to increase. At this point of time, there is a very, very low interest rate of 2.85% with 1 year free conversion. Below 1 mil don't have the free conversion after 1 year. 1 year free conversion, very useful, especially when interest rates dropping. On the right, you guys will be able to see the SORA rates. And SORA rates are basically the floating rates in Singapore, the ones that we look at the most.
Yep.
And we can see the trend. And this is very important because we need to ask ourselves, where are interest rates headed beyond 2024, which is one of the questions that we have to find out. Should we take the fixed rate or should we take the floating rate? Okay, everybody imagine you are John and Sally. Okay, you all have a $1 million mortgage. You can either take a 2.85% fixed or a 4.06% floating. Especially when this interest rate economy is coming down. I want to hear your sentiment. I want to understand you guys, how you think. Would you think that it is better to go for fixed or floating? Everybody, let's participate, yeah?
Yeah, so guys, will you all go for fixed or floating? Type in the chat, right? Okay, you can type in fixed or floating. Okay, so actually, Ethan, last time what I saw is that the fixed rate, the banks actually anticipated the drop and they started dropping the fixed rate also, right?
Correct. So the thing is, a lot of people, it is a perfect competition market lah. So everybody fight everybody so that you guys get the best rates. However, there are points where they start to lose money. So
the banks start to lose money.
Yeah, the banks start to lose money. For example, you look at SORA. Right now, right, the SORA is 3.65. So you borrow from MAS, you're borrowing at 3.65, but your mortgage is 2.85. Lose money or earn money.
Yeah.
Right? So what happens over here, right? This is very important because you can see if you choose the wrong rates, you'll be able to, you look at, one second. If you choose the wrong rates, you are looking at paying about $24,000.
It's a bit small, but if you all can squint your eyes a bit.
I try to zoom in. Are you
able to... it works. Okay, Hey guys, so by the way, type in the chat, would you all, in this situation, those of you with housing loan, will you all choose the fixed rate or the floating rate? Okay. If you are locked in, assume you are not locked in. Okay.
Yeah.
All right. Will you choose fixed rate or floating rate? I don't see y'all typing. I'm very concerned. Is it y'all cannot decide or I thought quite obvious.
All right. So I think over here we choose the rate that save the most money lah. That's what we aim to do. All right. So moving on. Oh, apologies. Many slides. Okay. So why is the FOMC projection important? Okay. Because Singapore does not control. Thank you, Celine. Thank you, Alex. Thank you, Alan. Fixed rate, fixed rate, fixed rate. Wow, everybody knows what's going on. Okay.
I also choose fixed rate. I just refinance mine. Also fixed rate.
So your one good. 1 year.
I think now even better already.
No, yours is the best lah. The one at this point of time cannot find any. Back then, right, SCB lose a lot of money. So anyways,
cannot say bank name.
Oh, that one over already.
Oh, that over already. Okay.
Past can. The now current one cannot.
Okay.
So over here, right, you're looking at this, and domestic interest rates have been typically below the US interest rates. So we look at US versus Singapore. They say past performances are not indicative of future results, but 94.47 is 94.47. So when we look at the FOMC, the key takeaway, number one, they hold rates at 5.33%. They say they will start to lower rates before the end of the year. But the PCE, which is the personal consumption expenditure, is not coming down. The number one, you look at the PCE, including food and energy, this is at 2.7. However, the number that they are looking at specifically is the PCE, excluding the volatile food and energy prices. And as you can see, 2.9, 2.9, and then 2.8, 2.8, 2.8. They are not coming down. And in the question and answer, later I'll share, Jerome Powell says that they are looking for 2.7, 2.6 as a sign to be able to see, okay, inflation's coming down to 2% and we can start laying off the pedal. So
So likely they will hold on to the current rate a bit longer. That's what you're saying, right?
Correct. They will hold on until they see that inflation starts to come into 2%.
Got it.
So over here, the GDP, we are expecting 2.1, which is the same. So they are not planning any recession. At this point of time, unemployment rate still 4%. In fact, unemployment is doing quite well, which is why I think it makes a bit more sense for Jerome Powell and the Federal Reserve to take a more conservative stance to be able to slowly and gradually lower the interest rate so that inflation will come down first before interest rate come down. So over here, right, the more important thing that we want to look at, right, is the federal funds rate, what they intend to do. So by the end of this year, they, like I said, they no longer want to cut 3 times. They only want to cut one time.
Yeah.
And as you can see, these numbers increase, so they intend to cut slower. And more importantly, the longer run numbers, this is the number they think that they can hover at. This is the quote unquote risk-free number, increase from 2.6 to 2.8, which is where I think money is going to become more and more expensive. All right. So, and the last one of the last few points, right, is over here in the federal funds rate, right? Everybody gets a vote. All right. Even Jerome Powell only get 1 vote. So everybody put down their votes, and the June projections, which is the most recent one, right? When you look at here, right, they say 4.88 to 5.12. There are 8 participants that vote for it. 5.13 to 5.37, 7 participants. It is quite a close fight. I do not know whether this year may drop or not, but I got a feeling next year in 2025, likely they are going to drop. All right. So that being said, from knowing those numbers, this is my favorite chart to show, because this actually shows you where SORA is likely to be based on my estimates. And we have a 63% confidence for this particular graph. However, this forms the fundamental of all our analysis, right? So let's just say, right, in 2024, if SORA rates were to drop to 3.49, we add one more spread, right? We add the 0.5 spread, you will get 3.99%. So that is at the end of this year. So 3.99 versus 2.85, you will probably take the 2.85. Next year, 2.81 plus 0.5, that will give us 3.3, which is still higher than the 2.85.
Yeah. So even with the cut, it still makes more sense to go for the fixed rate at this point in time.
I feel so, but
unless they cut really fast.
Correct but how if they cut really fast, then inflation go up, then we will see Paul Volcker moment again. That one not funny. But I think based on what I see so far, I think fixed rates are quite the safe bet, but this is a public domain where we cannot make recommendations, remember?
Of course.
So next one, the data points that we are
if you all want
at,
specific recommendations, you all can approach Ethan, okay? All right, later I'll get my team to share the link for those of you who want Ethan to take a look at your mortgage, okay?
Thank you. Me and my team lah.
Yeah.
So over here, the other key data points that we look at is the headline inflation, the yield curve, and everybody, we are approaching our 2-year anniversary of inversion of yield curve. So Pete, what do you have to say about this?
No, maybe you share like what do you think is the impact of the yield curve inverting for so long in terms of like, maybe the economy or even going forward? What do you think the impact of this?
I think looking at the yield curve, right, you'll be able to see mostly, right, it is the short term, the below 2 years that are pushed up right now. Because everybody is expecting a high level of high interest rate environment for now, but they expect like after 2 years it to drop off. So this actually gives a little bit of a hint on roughly where the treasury money believe the economy is gonna be.
Correct. Correct. Yeah, I feel that the yield curve, while it's being usually used, for those of you who don't know, yield curve are traditionally used to predict recession. They always say that if they invert, that means the recession is coming. I wouldn't say this time is different, but one thing to take note is that this time round, the near-term rates are very manipulated. So therefore, it remained inverted for so long. Right? It is not a natural phenomenon whereby people say, oh, I borrow short term, then I get a higher interest rate versus I borrow long term, I get lower interest rate. It is not a free market forces that resulted in the inverted yield curve. It is a Federal Reserve induced event, right? So is this still a reliable indicator? I'm not so sure, but I'm more inclined towards that this is less reliable, yeah, as a recession indicator.
My economic textbook tell me that yield curve, when invert, it will cause recession 6 to 18 months. I think we passed that already lah. So, so we are almost at 2 years.
Let's hope so. Let's hope so.
Yeah, let's hope for bullish. Let's hope for bullish days lah. And
later I'll share a bit more about my near term regarding stock market how this will impact the stock market.
correct. And ladies and gentlemen, what to do when you're invested in the stock market? A very important question. The answer is to ask Pete. So Pete, please.
Okay. Before I go into the stock market segment, some of you are DMing me, say how to get Ethan's team, right? Hey, if you want Ethan to do yours, how but he got a lot of people registering so if you want but you feel in that time then you make it known to him then you want him to take a look. Hey, but his team is very strong.
Ah,
okay?
my team is very strong. My team.
Okay. His team is very strong. So for those of you who say, hey,
strong.
Pete, I only want Ethan, guys, don't be like that.
Very strong.
Yeah. Okay, so the link is in the chat now. Rebrand.ly/unbeatables. Okay. So the link is in the Zoom chat. You all can click on that and just fill in a very simple form, right? Let Ethan know what do you need to do. Then his team can contact you. Okay. And before I go to the stock market, right, let's just talk a little bit more about mortgage, right? So Ethan, let's say if someone now say, hey, I haven't reached my end of my contract, maybe another 6 months, for example. Okay. But I'm paying like 4%, right? Versus I can get 2.85%. Should I let's say 6 months, 6 months. Okay. Let's say 6 months. Should I keep to my 4% and just bite the bullet until I finish the fixed 2 years, or would it be more advisable for me to break the contract and move on?
Okay, got short answer, got long answer. The short answer is based on aggregation. The long answer, if you want, I can go into the Excel and calculate to the point.
We use this example of 6 months. Okay, you use the calculator to calculate. Maybe we borrow, say, 1 million.
Okay, let me turn on my calculator.
Okay. I think this is very important because a lot of times when I talk to my property clients one-on-one, right, and they always say, hey, P, I still got another lock-in, I got another 6 months, another 4 months. Then they kind of don't want to refinance or they don't want to sell their property to move on, right? Then I say, wait. I know the lock-in carries a penalty, but every penalty has a fixed price. So guys, you need to calculate what is that price and ask yourself whether is it worth it before you make the decision not to do it, right? Because sometimes maybe it's worth it, we don't know. Okay, so in this case, let's look at Ethan's spreadsheet and see whether it makes sense.
多少?
Okay, 1 million. Okay, 1 million. 1 million.
1 million. Okay.
Just nice. You got 4%. Can you make it bigger? It's a bit hard to see.
Can.
Okay. Yeah.
Okay, so you can see, right? If you're looking at 4.06, we use 4% for
4. Okay. Yeah.
Okay, so you can see over here, right? Based on $1 million, 2.85 versus 4%. Okay, 6 months, right? Every single month, right? You are paying about $951 higher in interest. So if we look at 6 months, right, equals to this one times 6. The amount of money you would be saving, right, is about
$5,000.
570. Actually, it will be 4 months. The reason why is because you got 2 months to shift. So you need to give notice 2 months, So times 4. The savings you get is 3,804. However, right, if you are locked in, depends on what kind of lock in. If your lock in is based on clawback, right? Then maybe it's 2,000 plus, maybe you might save money. But
Yeah,
if your
exactly. Right. So a
but
lot
if
of
your
times lock in is just you need to return the legal fee and whatnot, right? Which is not a lot.
clawback,
Yeah,
clawback, clawback. The lock in, this
yeah.
one, very, very painful. If you are locked in, right, times 1.5%,
1.5%. Oh, then that's a lot more. Yeah.
$15,000, I will say bite the bullet.
Okay.
Mm,
So wait, how many months then will it be worth it? Let's say we just calculate for fun.
15 grand.
We just adjust these. Maybe, I don't know, 10. I don't know, 12. Around
Uh,
15, 13. 13. 1 year.
if
1 year, 1.5 year.
in 16, 16
16.
months
Yeah,
break
yeah,
even.
yeah. Okay, so guys, do check it. If you're not sure, right, fill in the form, check with Ethan and his team, they will be able to calculate for you. Because back then, for me, that was a bit of that as well. But for me, it wasn't the breakage fee because it was only the clawback of the legal fee and valuation fee, right? Something like that.
I believe it was the undispersed loan.
Yeah. The legal fee and the valuation fee plus undispersed loan, which worked out to be about maybe 2,000 over dollars only.
Mm,
Right? So guys, you must calculate whether is it worth it. In my case, it was absolutely worth it because I was dropping my interest rate from 4 and a bit to about 2.85. Yeah.
mm,
Right. So
mm.
must have a very clear calculation. Be very logical, go by the numbers, right? Then you will have the best deal. Okay? All
Correct.
right. Okay. Thanks, Ethan. Wow, James say Pete
No
handsome day
problem.
by day. Wow, thank you. You know that you're old, right? When you go to Ethan and you ask him to calculate your loan, right? And he tells you that Pete, you cannot take the full 30-year loan already. that's that's when you know that you're a bit older already.
Different stage of life lah.
Different
Every
stage of
stage
life,
got
different stage of
different
life.
fun lah. Every stage got different fun.
Okay,
Get
okay. So
group
my turn, my turn.
community life.
Okay, guys, my perspective is a little bit different from Ethan's. If everybody's perspective the same, then not fun really. Okay, so
Mm,
okay, so this is the news. They talk about this year they hold steady for this round. They're expecting
mm,
one cut, and in fact, majority of the news is saying that it will cut in September, right? So the thinking is that they will cut in September, that's 0.25%. Okay. But to me, the thing is this year is no longer important because the important thing to ask yourself is, let's say you were to buy a property or you to invest in the stock market, you are not going to hold just until end of the year. Especially for property, you are likely going to hold for multi-year period. It's a longer term investment. So you need to ask the question, what's going to happen in 25, 26? And Ethan already shared earlier on that the rates are definitely going to go down, right? How many rounds of cut? From here, let's say here, we're going to cut 1, 2, 3 cuts for 2025. From here, if we cut 1, 2, 3, 4 cuts for 2026. And 2027 onwards, it is going to be 1, 2, 3, another 3 more cuts. Right? So to me, the one cut, to me, is a distraction. A lot of people look at it and say, Pete, they were forecasting 3. Now 3 becomes 1, right? That means it's not good. Right? They are not cutting as much. But to me, that is no longer important, right? They call it fait accompli. That means it's over already. To me, the important thing is 2025, 2026. So what's going to happen if the rate starts coming down 25, 26? All right. I think that's something that a lot of people are missing because you're looking at near term, right? Later, I can talk about my near term projection, but I am generally a slightly longer term investor, right?
mm.
And especially come to property, right? Previously, people say, hey, Pete, why interest rate high, the price never drop? Right? Then I say, yeah, because people don't just force sell their house, they just hold on to the house. Right? In fact, when it comes to one-on-one, I always talk to clients, they say, hey, Pete, why nobody force selling their house? Why is there no super cheap undervalued property in the market? I say, you put yourself in the owner's shoe. Will you force sell your house just because the interest rate is at 4% or even 5%? You probably wouldn't as well. You will just tighten your belt, bite the bullet, and pay the interest. Right? They will hold on to it. So in order for people to force sell their house, something very dramatic must happen, especially in the Singapore scene. You must be unemployed and stuff like that. Hey guys, unemployment in Singapore, just now we saw Federal Reserve, US is 4%. You know what is Singapore unemployment? Singapore unemployment is
So
2.9. It's 2.9. That means almost almost in 100 people, only 3 people are unemployed, you know. And this is for overall unemployment. If you talk about longer term, longer than 9 months, if I remember correctly, it's 0.6. That means almost nobody's unemployed. Okay, right? Almost, almost. Right? So, guys, high interest rate doesn't cause the price to drop. But one thing, this one you can check with Ethan. His business become very good, right? When interest rate drop. Because people who are on the sides holding on to the cash and say, hey, Pete, I don't want to pay the high interest. I don't want to pay the high mortgage payment. Now that interest rate is already going to cut once, 3 times next year, 4 times a year after, they are starting to come into the market already. Okay? And guys, think about it. When this happens, what is going to happen to prices overall for property? Okay, this is for property. Now, another thing is this. The cut, although US haven't cut, but other parts of the world, other central banks already cutting. Do you know that? Right? The Swedish banks already cut already. In fact, ECB already cut last week. Despite their inflation number looks a bit worse, you know. Despite, so it's very funny, right? They always say that if inflation cools off, then they will cut, right? This time around, the inflation is slightly higher and they still cut. Later, I'll talk about why, okay? And SMB is a Swiss National Bank. They also cut. Now, Swiss Bank is a very important bank, right? They are the main bank in the Central Europe. Other than ECB, Swiss Bank is perhaps the second most important bank already. Now, the thing is this, why are the European banks cutting already? Why? Guys, because think about it, the last round when we had a very major recession, which area suffered the worst? Do you remember Greece? Right? When Greece had a whole slew of economic crises. So why are they so scared? Because right now, in the US, while we see that the unemployment is at 4% here, it looks pretty low, but it is increasing, you know. Can you see that? So it worries them. They are scared of this. They don't want this to go any higher because part of the Federal Reserve mandate is what? Is full employment. They want full employment. They only have 2 objectives, full employment and keep the prices under control. Okay? So they don't want another recession. In fact, after this, recently we have the weekly jobless claim is at a 10-month high. Right. So if you are the Federal Reserve, you see this kind of thing happening, are you not scared? Because these are generally precursors to what? Recession, right? So why are the banks cutting even though they think that the inflation worries are going higher? Is because the unemployment seems to be increasing, seems to be going up. And they cannot afford another recession. Okay? I can tell you, the central bank, if you let them choose between recession, okay, and inflation, they will take inflation at any time of the day. Because recession is definitely more painful. And plus, this year is what year? This year is election year. Not just for Singapore, but for US as well. Okay? So they are not going to risk it. France already had election and the far right won, you know. So people are very scared. If they're going to have a recession, the votes are going to swing the other way. So they don't want that to happen. Plus, another thing is this. If they were to have a recession, guys, can I ask you, what does the central bank do or what they need to do when there's a recession? Type in the chat. What do you think the central bank needs to do when there is a recession to get out of the recession? John say print money. Exactly. Correct. Right? So they will have to print even more money, you know. And do you think they want to do that? No, because they are already in debt to the head already, you know. If they continue to do that, they are going to get into trouble. Okay? And plus one more thing is this. Inflation is generally contributed by what Ethan just showed you many factors. There's one factor that's a major contributor to inflation, and it is cooling off quite fast. And it's this. Right? So this is the crude oil price. I don't know how many of you all noticed, since 2023, actually crude oil prices has been stabilizing. It came down, right? Okay, during post-COVID, it went up, okay? It came down and now it stabilizes. So this major contributor, right, is under control now. That's why the Federal Reserve also feel a bit at ease to say, okay, guys, 2025, 2026, let's just start cutting, right? I don't think the inflation is going out of hand. So yes, I know this is possibly not a very popular opinion, but my personal opinion is this. Out there, a lot of people keep saying, oh, prices are very high, inflation is very high. But when you look at real numbers, when you look at real unemployment, okay, I think this is what likely the Federal Reserve will do. They rather risk inflation than recession. Okay? Okay, but there is a wild card. There's a wild card. This one I read already. Oh, wow, I was so shocked. Okay, what is the wild card? They said there is a factor, right, that will really cause inflation to spike out of control. Okay? Ready or not? Ready? You want to guess on? You want to guess on? Your time in the chat. What do you think is that wild card that will really cause inflation to go out of control? And the banks are, in fact, delaying their rate cuts because of this. What do you think? Make a guess. Type in the chat. Hey, Ethan, you can also guess. This one just now we never discussed pre-show. So he also don't know what I'm saying. Okay, guys, what do you think is that one factor that can affect inflation so badly that the Bank of England is possibly delaying their rate cuts? Right, so ET says US loses dominance. This one we can talk about it later. This one I mentioned it in my newsletter recently. Very few people talking about Saudi Arabia leaving the US petrodollar. Okay. Charles say war escalates. Alan also say war. Okay. Hey guys, I give you all my opinion about war. The Israel war is too localized a war. It won't affect anything. Okay. Okay, come. Okay, this one is actually is Taylor Swift. Okay, this one meant to be a joke. But what I'm trying to show here is this. Out there in the news, they even say that Taylor Swift Eras Tour, okay, is going to delay the Bank of England's rate cut. And you know why? Because they say when Taylor Swift is in town, right, the UK people go on a spending spree.
Not wrong.
It's not wrong, but guys, think about it logically. Do you think that is it's not wrong, but do you think it's logical or not? Okay, do you think that is something that will actually happen? So guys, out there are a lot of doom and gloom news. In fact, doom and gloom news sells. Right? If I tell you everything is hunky-dory, everything is very good, right? They're going to cut rates as expected, you'll be like, oh, who wants to read those news? But if I tell you, hey guys, wow, inflation is going to go out of control. Things are going to go into shits. Okay, sorry, pardon my language. It attracts attention. Okay, it attracts attention. So that is something that really to take note of. And for property side of the picture, I just show the Singapore unemployment first, very quickly. Our unemployment, the annual average is at 1.9%. Goodness. 1.9%. Right? If you look at the resident unemployment, that means they don't count non-residents, that means foreigner, right? Is 2.7%. 2.7%, you know. You expect property price to drop based on this kind of unemployment? I don't think so. I don't think so. Okay? So that's something that I wanted to talk about. Now, the one news that I want to share on the stock market before we go into some charts, and if you have questions for either myself or Ethan, do put in the comments. Is this stock in spotlight? Right? This is a very major news that is going to happen. I don't know happen already, Is it going to happen? Oh, it's going to happen this Friday. Okay, I talk about it in my Telegram chat. Anybody know what it is or not? What is happening on Friday that's going to be quite major for the stock market? Okay, it is got to do with the most famous stock right now. Right, what is the most famous stock now? Is Nvidia. Okay, and Nvidia is going to get a 20% weighting on this ETF called XLK. Okay, for those of you who don't know, XLK is a tech ETF. So they will track the percentage of each of the ETF, each of the company, they are tech-based and they put it under an ETF. So if you're a bigger company, then you get a bigger weightage. Okay, right now the main weightage is actually Apple and Microsoft, right? But with this change, what's going to happen is that Nvidia is going to replace Apple. Right, so Apple's percentage from I think over 20% of the XLK from 20+%, right? Okay, is going to drop to just 4%.
Wow.
And Nvidia from 6% is going to increase to, if I remember correctly, you can go and search the news article, about 22%. So what this means is that this fund, XLK, a very big fund, very big tech fund, by the way, it is going to offload a lot of Apple and buy Nvidia. Right? It's going to offload a lot of Apple and buy Nvidia. So, guys, can you type in the chat? What is the opportunity here? Now that you know this news. Okay. Later we can go in the charts. What is the opportunity here? Okay, so ET says buy Apple put. Okay, what else? Okay, guys, generally I don't advocate buying puts because the market goes up over 70% of the time one. So you buy put is quite crazy right? You burn a lot of money. Celine says buy Nvidia. Okay, so that is the obvious trade. That's the obvious trade. Okay. Hey, but guys, do you want to know what is my trade? And I already do it. So I'm not front running y'all, okay? But I'm just telling you that I already do it because this news was already out some time ago. Okay. But what is this? What is this thing that you can do? To me, is this. I am always thinking of how to go ahead of the market. Right? How to go ahead of the market is this. Guys, I ask you, if Apple share price drop because of this news, right? Is it that Apple fundamentally got worse? Is it that Apple sold less iPhone? That's why the share price dropped? No, ma. So if the Apple share price dropped due to this so-called selling event, to me, is hallelujah. It will be amazing. You can go and sing the song, right? Amazing. Okay, sorry. Right? Because it is a sell-off with no fundamental problem. And to me, that is the opportunity, right? The opportunity here, I don't think is just Nvidia. It's the fact that Apple, if get cheaper tonight, it open already. Let me see. Haven't opened yet, right? 9:30. That's the opportunity. Okay. So I'm setting buying orders for Apple at about 4 to 5% lower than the current price. I put my buy order there. If it drop, then I buy. Right. So that's how I want to play this kind of thing. Okay. Yeah. So Celine say buy Apple. Yeah, right. EY says scoop up Apple shares even more. Exactly. Right. So this is the stock in spotlight over here. Nvidia has been running, but one thing a lot of people don't see is that Apple actually is still a very major player. Right? Recently, Apple talked about their integration with OpenAI. Do you know about it? OpenAI, the ChatGPT company. And ChatGPT basically say Apple can have access to them. They put ChatGPT in the iPhone. And OpenAI no need to pay Apple. And Apple also don't need to pay OpenAI. So it's a win-win situation. Whereas right now, when you open up your iPhone, you see your Google Chrome tab, right? The Chrome browser. Hey, Google pays Apple $60 billion, if I'm not wrong. $60 billion just to have the Chrome installed there. All right. So Apple still demands a lot in terms of funds. So I really like this. I really like this smooth. Okay, EY put out a very good point. EY says AI accessible on new iPhones only. Correct. You know why not? So they can make you go and buy the iPhone. All right. Hey, really, if you ask me, right, I also want to buy the iPhone, right, that is new just because they have access to the OpenAI. That literally is a game changer, right? You can use the full suite of AI within the tech ecosystem. Okay? All right. So this is what I wanted to share with you all. Okay. Once again, some of you are asking me what is Ethan's link. Let me just copy and paste again. Okay. Okay. Ethan's link is here. Reblendly. Okay, reblend.ly. Sorry. Reblend.ly/unbeatable loans. So for those of you all who who needs mortgage help, you want someone to take a look at your mortgage, right? See whether you should go for repricing, refinancing, which rate should you go for. Hey guys, by the way, it's not just the best interest rate, the lowest interest rate is the best. It also depends on a few things. For example, you need to sell in your next 2 years or not, right? How are you going to match your current housing situation? Or there are a lot of other considerations. Right? So do make sure you let Ethan know about all these, right? And Ethan can plan according for you.
Yeah, if you
Okay?
got a lot of money, then sometimes there are things that are like mortgage offset accounts and whatsoever. And
Yeah. Correct. So for those of you who say that, hey, Pete, my previous banker tell me that I cannot borrow this amount because of income. There are workarounds for it. Okay, of course cannot be no income but if you are just shy of a little bit, right, you can show pledging and stuff like this. Okay, so all these, Ethan is the expert, so you can ask Ethan to help you. All right, so I put a link there already. Okay, let me go into the slides a little bit. Okay, right, then we can talk about the market. Okay, so let's take a look at Apple pre-market. What's happening? Okay, firstly, before that, wait, let me share screen. Okay. Where is my Apple? Okay. Can see, right? Ethan, can you see?
yeah,
Can, okay.
yeah.
So if you look at Apple on the daily chart, wow, it has gone up already. Wow, pre-market is actually up. Ayo. So sad. Okay. Right. Pre-market is actually up. But it's okay, right? We can look at other opportunities. Right. So let's look at the broad index first. Okay. So like my previous live stream, right, when we were at this point, I keep telling everybody, hey, don't doom and gloom. Just look at the chart in front of you. This is the power of technical analysis. Technical analysis does not care about your emotions. The technical analysis does not care about the news. So whenever you look at TA, just try to shut off your news outlet and whatnot and just look at the chart ahead of you and ask yourself, what is the chart trying to tell me? Okay. And overall, right here, guys, this is S&P 500. I cannot think of a reason for someone to tell me that this is a bearish market. I can't think of a reason for someone from a TA perspective tell me that this is a bearish market. It just doesn't make sense. Okay. And one thing that I've said time and time again is that if you zoom out, right, from the 2022 crisis, we are just a little bit ahead only. Right? Let me see. Where's my marker? Is it this one? Ayo, too long never use. Okay. Where is it? Okay. Right? From the previous high, hey guys, we are only 14% from the previous high from the crash. 14%. Now, guys, each time when we come out of a crisis, do we just go out for another 14% and we start crashing? No, right? If you look at the past history, let's say from here, from COVID till the time that we start retracting, it went up 42%. That's from the high. From the low is 100%. Okay? Right? So it doesn't make sense one. Even when I take here, I go up, right? You can count this as 16%. And that's because COVID happened. Right? If you pull even further back, you look at this period, this is the black, what do you call it? The black China Black Monday, right? The 2016 period. Okay. You take this point, you pull it up all the way here, is 37%. So guys, it doesn't make sense for us to start retracing and go lower at 14%. It doesn't even make sense. Okay. So I'm still pretty bullish over here. Okay. All right. Okay, guys, any stock that y'all want me to run through, you can type in the chat right now. Okay. Did we look at Apple already? We look at Apple already. Okay. Right. So Apple is still going out, going up very nicely. Hey, please drop. Hopefully drop. Okay. 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 Jeffrey is asking TSM. Okay. All right. Okay. TSM. Okay. So right now, semicon in general has run up a lot. All thanks to who? None other than Nvidia lah. Okay. Right. TSM, if a lot of you don't know, is the mothership. So basically, they are the main supplier that supplies to all the other subcontractors. Basically, like your Nvidia, your AMD, all takes from TSM. Even Apple also take from TSM. Okay. So it's still going up. Now, if you look at the TA angle, I wouldn't buy right now. I wouldn't buy right now. Why? Because you can see stochastic is very high, RSI is very high, your MACD is like crazy high. Okay, so it really doesn't make sense. Right? I would at least want to wait for a bit of retracement. Okay, a bit of retracement before I enter. All right. Okay, so to me, investing is all about patience. Don't chase the market. Okay, but the thing is this, also don't take too long. Eventually, you will have to enter one. So when you're waiting for retracement, right, guys, be realistic about the retracement. It is just like Singapore property. I always tell people, when the price kind of soften, grow a bit slower, like this year, guys, property price actually grew slower, Correct, Ethan? We saw a lesser growth this year compared to last year, right? And people are still telling me, Pete, no, I want the price to absolutely drop. I say, hey, be realistic, What makes you think the price will drop? Okay? So over here, TSM, you think it will go back to where? Here. Not realistic, right? Likely going to be around 50 EMA or so. I would say that would be a realistic drawback, pullback. Okay, that's how I will look at it. Okay, another one. Adobe. Wow, this one of my recent favorite because it was so hated. It was so hated by everyone, right? Adobe. That what happened to this part? When ChatGPT announced, Everybody say, wow, AI is here. Nobody need Adobe to do any animation, any Photoshop and whatever not, right? Everything is just AI. ChatGPT do everything for you. So when it first announced, the price dropped. Then I think when they have their earnings, wow, the price dropped some more. Then it drop until here. Okay. So this is the kind of story that I like. I say, hey, this might be an opportunity. Okay. Now, why is this opportunity? Because if you look at Adobe as a company, right? So let's use ticker. Okay. Hey guys, for those of you who want to do fundamental analysis, there's only two websites that I recommend. One is stock analysis and one is this one, TIKR, ticker.com. Okay. Ticker, if you want the full suite, you need to pay for subscription. But I feel it's very worth it to pay. Okay. Generally, I'm the type of guy that I'm happy to pay for things if it's worth it. Okay. So if you look at fundamentals, okay. Oh dear. Just now we were talking about me and Ethan talking about like Wi-Fi. I want to increase our Wi-Fi speed.
Yeah. 10
Hiya.
GB.
I want to go for 10 GB. Why is it so slow? Okay.
Mm.
So yeah. Okay. So if you look here, can you see that Adobe revenue is always increasing? Okay. If I look at cash flow, it's also increasing. Okay. Maybe I swing to the other side, easier to see. Okay. Can you see that the net income is increasing? The cash flow is also increasing, right? Free cash flow also increasing. Hey guys, this is a company, right? That the free cash flow margin is 30+%. 30. You find me companies that can make 30%. If I tell you company is a company that revenue is increasing, the net income is increasing, the cash flow is increasing, and it makes 30%, not net profit, but free cash flow margin. What would you think of the company? Would you think that it's a bad business? Right? So be very logical about it. When people tell you that, hey, well, this company is going to die. One thing that we know is this. When everyone is on one side of the picture, one side of the bed, that means you maybe should take the other side. Usually it's like that. Right? You look at Adobe, it's a company that the return on equity is over 30%. Right? The EBIT margin is over 30%. This is a super strong company. Right? It has also very reasonable debt, less than 50% debt only. So it's not a company that will go badly out, no. Right? So recently what happened? Adobe suddenly released their earnings results and everyone saw that, no one is leaving Adobe. In fact, Adobe make more money. Right? Why? Because after you ask the ChatGPT to do your Photoshop, whatever, some of them looks very funny. Some of them looks stupid. Right? So you still need Adobe to go and solve all this for you. Okay? Right? Okay. Let me see others. Okay. MasterCard. Okay. So Yvonne might be from my Telegram because I recently did a buy call on MasterCard. Okay. I think I did. Let me see. What is the price that I did? Let me go to my let me go to my Telegram and see. Okay. Give me a second. I think I did 4. I buy sorry, because I do like many call options. So sometimes I cannot remember my thing. Okay, I did 440. 440 strike price for MasterCard. Okay, so let's share the screen again. Okay, right, 440, and now where are we? We are at 447. Okay lah, good lah, right? Why I love it? Because right now you can see a few things. If you look at the channel that I draw, is right about the bottom of the channel, plus this red line. Hey guys, what is this red line? What is this red line? See whether anybody from my community last time, y'all will know what is a red line. I always say red line very important. What is red line? Hey, nobody know. Serious okay. Yes, the 200 EMA. Okay. And you can see that 200 EMA is quite a strong support in the past. Whenever there's 200 EMA, maybe it will undershoot like this kind of thing. But otherwise, 200 EMA is quite a strong support. So I love it. Okay. And plus, this is a strong company. Right? A lot of people kept saying, oh, maybe next time nobody will use credit card because everyone can do payment online or whatever. But end up, online payment still uses the credit card. Okay. So this is something that once again, be very aware when people say that, wow, this is going to be absolutely disruptive. It's going to change the whole ball game or whatever, right? Be very careful because changes might not happen so quickly, right? I give you an example. Previously, when EV first came out, everyone kept saying that all the cars will turn EV. right? But where are we now? Now the demand for EV has dropped. Some companies, some countries are even removing subsidies for EV, right? We are not going in the direction anymore already. Or we are, but much slower. How many people buy EV in this case? Not that many. Okay? So be very careful when someone tell you, hey, this is the most disruptive stock. Hey, disruptive doesn't mean anything. Okay. Okay. All right. Okay. Tesla, let's look at Tesla. Some of you want to look at Tesla, right? Wow. Okay. This is my notes from I work with my students. I don't know whether you can read this. Basically, clear downtrend, got rejected off the resistance here. Okay. Right? Quite obvious. I removed some of the things first. Okay, so you can see the resistance here is very obvious. Got rejected. Right? So this is Tesla. I know Elon Musk recently had a victory. He got his pay package, right? Like, I think the shareholders approve. But overall, to me is this. People can say Tesla is a Android company, a humanoid company, energy company. But if you look at the financial statement, right, 90% of the earnings still come from car sales. So to me, right now, it's still a car company. Right. So to me, it is still quite overvalued. But on the TA angle, it looks not very encouraging. Okay. Okay, Celine asked Amazon. So let's take a look at Amazon. Right. Is it time to do buy call? Wow, this is a very specific question. I cannot answer that question, but I'll just give you my take on Amazon. Is this Amazon has gone up quite nicely. Okay. I'll give you my TA take. Amazon has gone up quite nicely. This is what I call as a mid-term support. That means it is not a very strong support. Okay, guys, what is a strong support? A strong support is this kind, where it drops to a very clear 200 EMA type. Right? So this is like a mid-term support, right? But if you look at all the technicals here, it doesn't show you much, except for stochastics. The rest are like half, right? Not doing much. So that's not something that I'm very attracted to. Okay. But if you look at let's see, if you look at valuations, okay. And Celine, when you talk about buying call options, right? You also need to be very specific, Are you buying for short-term trade or a long-term investment? Very different objective, requires very different methods. Okay, right? If you look at financials, I would say this is a very strong company still. Let's look at valuations very quickly. Where is it? Okay, forward multiple. PE is where? 38. Okay, so it's actually cheaper than I expected. Yeah. Let me see. Let's look at annually. Then we look at valuations. Okay. Yeah, so the valuation is definitely on the cheaper end, right? If you look at across the board, PE, price to cash flow, EV, EB is on the cheaper end, that's for sure. Okay, so that's good. That means you know that you're not paying excessive amount, right? So if you're buying it for long-term investment, I would say it's okay. If you're buying for long-term investment, I would say don't just buy one call option, right? I think there's a lot of mistake people make. When they buy, they think of like as though it's a bet, no. It's like, oh, buy one. Now, there's one aspect of investment that you will just buy one, which is property. Okay. Right. So that one is really like a one-time investment. But for stock market, you can distribute. Right. So actually don't need to ask about whether now I can buy call option. Is to ask yourself, okay, how many can I buy? If I'm gonna buy 4 or 5, maybe you want to buy now one, then later when it drop to 200 EMA, you buy another one, something like that. Right? You want to on average enter about 4 or 5, then you know that you don't have to time it too well. Okay, right? Because not everybody has the god hand to like, wow, I'm gonna get the lowest point, Okay, anybody who tells you that is living the dream, Okay, right? Okay, Jensen is asking, what's my take on CMG stock split? Now, stock split generally don't have much impact, I would say. In fact, I think for certain companies, stock split tends to be a bad thing, right? For Nvidia, for example, it became a good thing. After the stock split, they went up. But I think it's not so much of the stock split. It's just the whole market is right now behind Nvidia in this case. Okay? But if you look at Apple, if I'm not wrong, Apple last time when they do stock split, right? Okay, let me see if I can find the stock split date. Very hard to find. Okay, I can't remember, but I remember last time I did a research before on Apple, right? Whenever they do stock split, right, the company share price will drop a bit. Okay, so, but all in all, not much impact, I would say. Right? CMG right now, for those who don't know, Chipotle is undergoing a 100-to-1 split. Or is it 50 to 1? Can't remember. Okay, right. So Chipotle did very well recently, right? For November, oh, almost double already. Okay, or 50 to 1. Okay, 50 to 1 split. Right. Pre-market also up already. Okay, so maybe people are anticipating the split. Right. But if you ask me, will I buy right now? No, not really. Look at this. This is not great. This is not great. This is not great. Right. I want these two to be at the bottom. I want this to be at the bottom also. Okay. All right. Let's see. I'm gonna pick a few. Hey, Ethan, you got any stock or not? Since you're the guest, I let you choose.
Microsoft.
Microsoft. Okay, come. Let's look at Microsoft. To me, Microsoft is a magical, like miracle story. From the boring, people always think of it as just the open Microsoft Office kind of company. Until now, it's like, wow, the forefront of technology because of one single thing called OpenAI, right? Okay, but overall, I would say Microsoft from a chart perspective is good, right? But I think right now, perhaps we are closer to the resistance at this point. Yeah, so you can see from the TA agrees with me as well, right? We are closer to resistance. And earnings is coming. So earnings is on 23rd July, sorry, 23rd July. So if you're going to do options, call options, you might want to wait after that, right? If you're selling, then it's okay, right? Selling, then that's fine. Irene, how about long call for XLK? Okay, so Irene, XLK itself will not be impacted on. You know why? Because they are just selling Apple to buy Nvidia. So the price wouldn't change, right? They're selling $50 million worth of, I think $6 billion or something like that of Apple to buy $6 billion worth of Nvidia. So nothing has changed. The value is the same. They just shift allocation. It will go up if the further XLK component, right, including Nvidia in the future go up, right? But if you want to buy long call, I would say right now doesn't look like a good time. Right? Super high. Super high. So you want to buy long call when it's at the support, when it's at closer to this type. Or even if you don't want to buy at the strong support, at least buy at the intermediate support, the medium support. Now it's like there's no support. This is anything, this is resistance really. Right? This is resistance really. Kit Wong is asking, will Nvidia shoot up? Well, I don't know, man. I really don't know. But to me, is when everyone is on one side of the trade, which is Nvidia, I don't want to be on that side of the trade. Or at least not now. A bit too obvious, really. Guys, think about it. So you can allocate a little bit. I think that's fine. But please don't like FOMO and follow the crowd and say, oh, everybody buy Nvidia. Let me just 30% Nvidia. Then you can get into trouble. Okay. I'm not saying Nvidia will drop. Okay. But when it's so high, I'm not very interested. Okay. In fact, if anything, I'm looking at the peripheral companies that supports Nvidia. Right. For example, Broadcom. Right, Broadcom is tonight shoot up so much. What happened? Right, Broadcom is the company that will support all the data centers, give you the racks and whatnot, right, switches and whatnot. So these are the what we call the spade and shovel company. Yes, right. These are the spade and shovel company. So regardless whether Nvidia made it, AMD made it, Broadcom will sure made it. Okay, right. Qualcomm as well is the type of company that will make it so long the whole AI thing can make it. Yeah. Right. Then for those of you who are not sure, like what Celine said, if you're not sure, then just go for ETF. Right. You can buy ETF, which is the SMH ETF. Right. So you can capture this. This one, you don't need to worry too much. It's spread out across the various segment already. Okay. All right. Let me see. I think Alan asked a few times. Viva. Okay, let's go at Viva. VEEV. What has happened to VEV? I haven't looked at it in a long time. Oh, the chart looks so different from the market. Okay, guys, can you see? Okay, so I don't know the fundamentals. Okay, let me see the fundamentals quickly. I used to look at Viva system in the past, like 5-6 years ago. But I haven't looked at it for quite some time because I remember the fundamentals deteriorated, so I didn't look at it. Actually revenue is okay. Earnings, I remember this part, it was like not very stable then. Okay, that's fine. Let's look at cash flow. Cash flow is good. Hey, cash flow is good. Okay, let's look at valuation. Oh, I know why already. It's not super cheap, right? Okay, so you can see the PE is about 28, EV about 22. For this kind of niche SaaS business, okay, I'm generally not a person for SaaS overall. Okay, I'm not in favor of SaaS. You know why? Because SaaS to me, there's very little economic mode. People switch software like free on like okay, anything can switch on right? So that's why you see the trend is like now it's like kind of sideways. But there is a very strong, clear support. So if you are looking at selling puts, you can sell here if you want, right? Sell a bit higher also can. If let's say this is what you want, you say, hey, I want to buy Viva Systems, but I only want to buy at $161. Right? So you can look at selling puts. Okay? All right. Okay, market open already. Let's see. Where's my Apple now? Apple, come on. No, 217. Cannot buy. Okay. Wait. Be patient. Okay. Be patient, everybody. Okay, Zixuan is asking any parameters to evaluate the fair price of ETF. So guys, you can actually go and search for ETF in terms of PE ratios if you want. Yeah, you can find PE ratios on ETF. So that is one way. But to me, ETF, I generally just look at broad TA, right? Broad TA. Because to me, ETF has this safer element that it will never go bust. Right? So for example, if you're looking at QQQ, right? Okay. This is the Nasdaq 100. If anything happens, let's say Nvidia collapse, Microsoft collapse, what the ETF will do is very simple. They'll just sell away those companies and buy new ones. That's all. It will do a rotation and then buy more companies. Okay? Right? So that is the beauty. That's the beauty of ETF. But of course, then in this case, what's the downside of ETF? The downside of ETF is that you will never see that kind of jump like what we saw in that Broadcom Apple as well, all those like one night 10% jump, right? Or one night 20% jump. You will never see those one because it's an ETF. What does it mean? That means all the companies are holding hands together, right? Or let's say in Nasdaq, 100 of you holding hands together. If you are a super jumper, you jump very high, but you must pull up everybody to jump. It's not possible. Okay, so that's the trade-off for ETF, but it provides you a safer downside protection. Okay, but having said that, there are a lot of those exotic way ETF. Those I don't consider ETF. Those are just what are those? Those are synthetic investment instrument that people created. Those are as good as you're just going buying like those weird insurance investment like that. Quite scary. You don't know what you're buying into also. Okay, 1 hour already. I don't want to hold everybody up. Okay, okay, Ethan, any last words? Any parting words?
Are we gonna do the planning to buy a home portion or no?
Sorry?
Are we gonna do the planning to buy the home?
Okay, come, let's do that. Okay, so some of you are asking earlier on about timeline. That's why I wanted to get Ethan to come and share a bit about buying home timeline over here. Okay, so for those of you who are looking at renewing your mortgage loan in terms of what timeline, right? So Ethan's going to go give you all a quick run through so that when you do the loan application, make sure that your timeline fits. Oh, okay. Hey, Ethan, you have slides for that, right?
Yes, I do. Okay, here we go. All right, so are you able to see this? Okay, cool.
Coming up. Wait, haven't come out yet. It's coming up, but haven't come out yet.
Zoom quit unexpectedly. Once again.
Can we?
Okay. Can
Yep.
Can see. Excellent.
But I can see your Zoom quit unexpectedly screen there though.
I also don't know. Don't send. Okay. Should be all right.
But I can still see that in the middle. Okay, you try to click through your slide, see whether it works.
Can see?
No, it's not moving.
Oh, okay.
Okay, but maybe it's okay. Maybe Ethan, you just share verbally, right? What are the 4 main key points for those people who are refinancing or repricing their mortgage loan? What should they look out for?
Okay, so the 4 main key points. Okay, first things first, right? Before you go shopping for your property, get your AIP so you know roughly how much your budget is and what you should do. Later, I can run through a little bit. I do quick one. Then try to accomplish what you want to do with as little moves as possible. Means don't keep jumping. If possible, you from 2 jump to 3, then 3 jump to 4. Try not to lateral jump lah. Okay. Don't overstretch also because you don't want to be in a point where you don't have enough money to pay for your mortgage.
Yep.
And make sure you try to optimize everything you can, such as like what to do, extending your loan tenure, lowering your interest rates and all that kind of stuff. So Yeah, and mortgage is one of the best things to be invented because money depreciates, you rent that, property appreciate, you buy that.
Yeah.
So yeah, and based on what we have right now, 2.85 versus Singapore savings bond of 3.3, I say we are very, very cheap.
Yeah.
And it's only loan that you can use your CPF OA to pay for, which is why everybody, their holding power so strong.
To me, it's the only asset class that I'm happy to or feel safe to borrow money and invest. Right?
Yeah.
I will never do that for the stock market. I will never do that for the options. But for property, it's like not just me doing it, everyone's doing it. So, but the thing is this, because it's such a big quantum, right, guys? Every 0.1% that you can make a change in the interest rate they're paying, right, it can lead to a very significant saving down the road. Okay, so do make sure you get Ethan and his team to take a look, right, at your portfolio to see what are the things that you can optimize. A lot of times people think that their portfolio is already optimized. That was my thinking. I thought, hey, my mortgage loan okay lah, optimized already. But actually, there was so many things that can be done, right? And especially for some of you who say, hey, maybe my loan's still not quite there yet. I can't really buy the property, but actually maybe you just needed someone with an expert opinion to say, hey, actually you can do this, do that, maybe some pledging or some other strategies to improve your loan capacity, right? I think that's very important. And Ethan, right now, they can take the fixed rate plus it can reprice 1 year later, right?
1 year later, they can reprice
Yeah.
1 year later.
Correct. So guys, if you are worried that, hey, P, if I take the fixed rate now, later the interest rate cut, like what you say, drop how? Right? Then guess what? Don't worry. One year
And
later, you can
greedy hail.
reprice. Yeah, you can go to the better rate after 1 year. So to me, that is
Correct.
the best thing. If you're paying anything, right now you're paying anything that is more than, I would say, 3% interest rate, you should be thinking of changing. Yeah, you should be thinking of changing.
Greedy hay is correct. Also need to worry about the SSD, the penalties when you sell and everything. So yeah, come and
Yeah.
then talk about it, talk everything through, and then get the best thing done for you lah.
Yeah. Okay. All right. So let me just post the link in the chat again, right? For those of you who want to get Ethan and his team to review your portfolio in terms of your mortgage loan, what can be optimized, what can be done. All right. The link is in the chat right now. Okay. All right, guys. That's all we wanted to share. Thank you everyone for coming. I hope this is useful. And in terms of lineup, I'm actually preparing to launch something for my investing community. Right, this is something that I've been thinking for a long time. I've been holding it back because I didn't know whether I have the time to do it. But right now, I've shifted my plans, and I think that's something that I want to share with everyone. Right? I want to help as many people as possible to really grow their profits in the stock market. Okay, and I think right now the stock market, while it looks a bit high, but you want to be prepared. When the price comes down, right, you will be able to take action. But the thing is this: you need to be prepared. You want to know what are the actions to be taken before that happens. And I want to use my expertise as much as possible to help as many people as I can. Okay, so keep a lookout. I will share more details about this initiative in due time. Okay, guys, once again, please join me to thank Ethan for coming on, right? He's very generous with his time. I told him every time got FOMC, can we just come out and give an update? And he never rejects me. Really, really awesome. Okay, join me to thank Ethan, type in CCC. Okay, hey, thanks Ethan for coming on. And if there's any more good rates, just share with me, then I'll share my community in the Telegram also.
Awesome, we'll do that.
Okay, everybody, that's all we have for tonight's Invest with Pete live stream, and I'll see you all in the next one. Okay, bye-bye.